Hello and welcome to Dollar Index Analysis. My name is Vic. I'm the founder of Ikensa Capital Management. So, what's happening with dollar? Is it going to take any corrections, or what kind of scenarios we can have in the new quarter and the new month? Let's find out. Okay, so if you have not watched the previous analysis, please go and check that out because that contained the overall macro structure of the dollar. But just to give you a very quick recap, this is what we have on monthly time frame. The market is creating a W pattern here, and it has reached a potential FCP zone, potential reversal zone, and then market may actually start to go down. So we can expect some correction, but there are a few scenarios. Last week, what I suggested that we should watch out week's closing candle and month's closing candle, because if I go to the week's closing candle, this candle was overextended. As you can see, this was the biggest of several candles. So that is why we were expecting a correction in the last week, and that's exactly what happened. The last week turned out to be bearish candle. Now this candle right now, which was the last week of September and towards the end of the quarter as well. This turned out to be a good rejection candle, right? You can see the wick at the top, and this is also kind of engulfing as well because the whole body is inside the previous one. This usually constitutes a bearish scenario. However, we need a confirmation because after this, usually if we get a new candle which is going down, then we can expect further movement down. So this week is going to be very, very important. And we know that it's going to be important anyway because we have a new quarter starting. So that can actually set the tune for the rest of the year as well. So what we have is actually, if I go to the daily time frame, this is the bearish scenario that actually happened last week. So we had a very good engulfing candle, and after that it was followed by another bearish candle. Now, this candle is somewhat kind of like an inverted hammer. It's not technically inverted hammer. A lot of people will argue that, but this is kind of like, because it has a huge wick at the top and then we have a body here at the bottom. That is why I am expecting, we can have a little bit of bullish move, maybe going somewhere around here, around 113 or so, before we can start to see a drop or something like that. So if the candle starts to move, if a new candle starts to move upwards, then we should watch this area around 113 or so, for further confirmations. However, if the new candle starts, as soon as the market opens and it starts to go down and it actually ends up a proper bearish candle below this previous candle, then we can expect further movement down. So this is what we have on the daily time frame and based on the candlestick patterns. Now let's bring in the original analysis. So we are already in FCP zone. So if I show you the whole structure, so let me go back to monthly, and this is the W pattern I was talking about. And these targets and these FCP zones were given months in advance. Actually, last year they were given in last year, and they are still valid. So the market has come into this FCP zone and started to take a little dip here. It is still bullish, as you can see on the monthly time frame. It is still bullish. On the weekly time frame, it is still bullish. However, last week, what happened? The market came and touched this particular trend line and started to give a dip because we were still here in this FCP zone, and we also had this trend line. So this was kind of expected, and I also kind of warned on September 28th in the morning, watch DXY very closely today, irrespective of what you're trading, because this is going to be very, very important. And after that, this was given, and I was expecting a little drop here because of that, and that's exactly how it actually played out. So the market started to fall down, and as I said, you should watch the daily candle to go back into 113. Another reason for that is there is a gap available around. Let me show you this one. Let's go to the daily time frame. So if I go to daily time frame, we have a gap available around 113.225. That's the gap level here. And this market never leaves any kinds of gaps open. There are several gaps open which are around, like, all the way down to 90 levels. So at some point in time in future, dollar is going to fall to that level. But because we have this gap available right here, like, it's very close to current price, so there can be a push to the upside to close this gap before it starts to decide, like, whether it wants to go up or down. But this can be a very good magnet. We can also expect market to move higher because we have this W pattern which finishes around 113, and we also have this kind of supply zone as well. So the whole thing is, like, saying that we should be careful that the market could be heading into 113 at least, and then if it breaks through, then it can actually try to go to this level, the previous structure level, around something. Let me give you that level. So it could go to 114.533 level as well if 113, this particular area, it has been broken. Okay, so that is why we should be aware of this thing. This is also setting up a particular pattern which actually, like, goes back up to retest some of these levels and then starts to take a dive. So that is why we should be careful with this. Now let's go and look at Vata and Visage as well. Okay, so on Vata and Visage, if I go to the monthly time frame, you see, based on the candlestick pattern, we have already discussed. So there is nothing new here. It is still bullish. So this is blue, this is blue, this is blue. So on monthly time frame, everything is still blue. Okay, so no change in the trend at all. If I go to the weekly time frame, on weekly time frame, this is still blue, this is still blue, this is still blue. Okay, and this bullish target was achieved here. This target was achieved here, and so the market has actually taken a little bit of correction here. Now if the market starts to go down, then it can come down and touch water curve as well. But let's look at it on daily time frame. Now on daily time frame, what we have is actually red color here, and this market has done red as well, and we have a signal as well. So it can fall down to this particular target, but as I said, it can first of all go higher, and if it does not actually violate the previous high, then we can expect it to fall down to approximately this water target, which is 109.5. So that is quite a possibility, but watch out for that bullish move first and wait for a confirmation before you start to look for anything like that. Okay, so if I go back here to this analysis and go to the smaller time frame, what we have is market could be heading back into this FCP zone, nearby to this FCP zone, and if you get a confirmation, then you can look for, like, maybe short opportunities like that. So this is what we have on dollar index. If you want, by the way, I'm working on a full analysis of indices today. If you want a report of that, it's going to be premium analysis. So if you want a report of that, then let me know. Like, you can send a direct message or you can contact me on Telegram. This analysis report will contain Dow Jones, FTSE, S&P 500, and few other things, which are going to be very, very important for the coming months. Hopefully, you enjoyed this analysis. If you did, please make sure you hit the like button, subscribe to the channel, and share it with other traders and trading communities so that they can also get help from this. Thank you. Thank you for watching. Find and follow us on these social media channels.